From the floor of the CME Group, this is Danny Riley on today's Cash Close. Well, you know what I did? I asked the CME to leave the lights on for me a little bit tonight. Now, you know what? Listen, we're heading into a very, very big thing here, traders. And, you know, I'm going to name this video the S&P 500 Futures and the Pre-Fed Rate Hike Rip. Now, I'm not going to do any of this up and down and range stuff. I'm going to talk a little bit about what's going on since the beginning of December. Since the beginning of December, we've had a 120 handle drop. And in the last 24 hours, we've had a 62 handle rally. Now, in my opinion, that's really the way this has worked all year. You get these big drops, you get these big rips, but you know what? This is a little different. As we go into this Federal Reserve meeting, we've got an extreme amount of volatility here. And one of the things that I think is almost unbelievable, it's almost scripted, how they predicted that on the 10th day, trading day of December, that the S&P would make a low, and then on the 11th trading day, the S&P would rally. Now, it did exactly that, but I'm not sure that that script's going to play out exactly the way it's going to be today or as we go into the Fed's rate hike. Now, according to the CME's Fed fund rate, again, latest statistics show that there's an 81% probability that the Federal Reserve will raise interest rates today. Now, I think it's already in the cards. I think it's already in the market. And the question here is, what is the S&P going to do when the final announcement is made? Now, it's my opinion that this is already priced in, but that doesn't mean that there's not going to be some extreme volatility once the headline comes across. And obviously, with the increased headlines, algo stuff that's been going on lately, and all the increased volatility, we think it's going to be a shambang of a day tomorrow. But what we think may happen may fall under something like one of MrTopStep Trading rules that says that you're supposed to fade the initial move after the Fed announcement. In other words, if the S&Ps drop sharply, you're supposed to fade that move and get long. And we think that if that happens, there could be an even sharper rally to the upside. Now, look, there's a lot more volatility out there, and it's not going to just stop as we go in at the end of tomorrow. We've got the crude options expiration on the CLF, the Jan crude options expiring on Thursday. And also, in addition, we have the API today. So there's going to be a lot of movement in crude oil leading up to, which is right now, which is that high yield precursor, leading right up to today's Federal Reserve meeting or announcement. And then you've got Friday's D-Squad which is supposed to be the third largest on record. And if you're following that Marco from JP Morgan, the quant guy, he's expecting commodities up and the index market's down 2%. So that said, we've got a lot of volatility coming our way. And I think that once we get past this D-Squad we will start going back up. And we may already be going back up. And again, I did DK my 2200 call on the S&P, and then a couple people on Twitter came back and said, oh, you know, the S&P could rally this much in one day. You know, you could get back to your 2200. I think of that it would be an extreme. I think 150, 160 handle rally going into the end of the year would be an extreme. But I never left out the fact that the S&P could possibly get back to 2150. We're going to leave it like that. It's going to be a volatile day. I'll try to do a video during the day tomorrow to give you a little update after the Fed. But that said, if I don't, I want to wish everybody a very, very happy Merry Christmas and happy holidays. I know there's a lot going on in the world right now, and I just say that we just kind of buckle things down and keep things safe, and we'll see you guys tomorrow on the opening print.